What's going on, people? It's GBP baby. It's currently 1:25 a.m. on Friday the 2nd of June. Um, this is supposed to be a daily analysis. However, due to the market shift that we've witnessed this week, I thought it'd be, and considering it's the start of a new month, I thought it'd be good for us to look at IPDA ranges. These are very advanced concepts. This is month 5 of ICT's ICT's core mentorship. So the topics I'm going to be talking about are quite advanced, I'd say, but stick around, you might learn something. And yeah, we'll just jump straight into it. So what I've done is I've gone to the 1st of May, and that's because when you're looking at IPDA ranges, you need to go to the previous month's opening day, and then you need to look back 20 days, 40 days, and then 60 days. And then you want to also look forward 20 days, 40 days, and 60 days. And then I've marked out the highs and lows of each period. I've also marked out the midpoint of the most recent period. And what it does is it allows us to understand the algorithm's look back period. So what the algorithm's likely to do is it's going to look back within either 20, 40 or 60 day period, refer to certain levels or PD arrays, and then based off there it will create a shift in the market, or it will change accordingly. I'm not 100% smooth with this, so this is actually I'd say this is one of my first or few times me actually applying it. I decided this would be a good time to apply it because the market did catch me by surprise this week, so it'd be nice to look at it. And so what I've done is I've also added the dollar to it here, and with these in mind, we can see accumulation happening in the pound and distribution, etc. So as you can see, when we started to move up here, pound was making higher lows, as US dollar was making higher highs. So it shows that there's some kind of accumulation going in the pound, because we should have been seeing lower lows as dollar was making higher highs, but we didn't see that. So we can see accumulation going on in the pound, and it's likely that they're going to that smart money is going to want to distribute that accumulation somewhere within either the past 20 day, 40 day or 60 day period. But I can already see a massive fair value gap resting up here that is likely to be a potential draw on liquidity. And I'm also going to look at where it's likely that dollar will start to draw down to within the next 20 and 40 days. Now, if this is your first time listening to this concept, the IPDA ranges, honestly, I'll leave a link below, but go to ICT's playlist for month 5 of his core mentorship. The first episode, he explains this completely in an hour episode, and you'll understand what I'm looking at here, because it's vital for being able to frame our draw, because I was genuinely confused this week, and I thought, okay, from now on, at the start of every month, I'm going to just do this, look at the whole IPDA ranges, and hopefully we'll have a better look. Anyway, so what ICT states to do is to look at all the PD arrays that rest within the past 20, 40 and 60 days. So as you can see, all of this has all been traded pretty much. So my focus is definitely on this period, basically May. A lot happened in May, a lot more than I realized. I didn't realize how much went on in May. Like, I didn't know this fair value gap was created during May, but I'm going to mark that out as a potential draw, because it seems pretty obvious that price wants to reach up there. And then I'm also going to mark out this swing high here as buy side liquidity. And I can imagine that once we do reach here, we're gonna experience some kind of consolidation or some kind of slowdown, and then I'm expecting heavy distribution to start to happen as soon as we trade into this fair value gap. Also, we have a breaker here, swing high, swing low, making this swing low the breaker. So I'm also going to mark out the wick of this, because I'm expecting price to respond to this area specifically. And I'm also going to drag this out for the entire 20-day period here, because I'm expecting price to refer to it within this 20-day period. So that's going to take us right to the end of June. make it a lighter blue. Ooh. Yeah, that's okay. And I've also marked out the 50% level because, again, this is a range just as much as a fair value gap's a range, just as much as an order block's a range. So I've marked out the 50% level because I do believe that price is going to refer to this level. And you can see that we've aggressively traded through this level, so I would not be surprised at all if price found some kind of support or started to consolidate around this level specifically. So I'm also going to make another line that's going to be quiet fate, because I don't want the same. Actually, we can use the same one and just make it a bit lighter. But yeah, I'd say that being able to look at the IPDA ranges on a 20, 40 and 60 day look back period allows you to really frame where the market's likely to draw to. I wish I did look at this earlier, especially with the comparison of dollar, because it's likely I would have recognized that we're clearly accumulating pound, especially since if we add euro, I don't want to get too carried away here, but if we had euro was doing what dollar was doing, however pound wasn't. So yeah, it's been quite complicated. If you've watched my videos this week, you'll see I was very all over the place, a little bit unsure, but it's good that we get back. It's important that we make sure we get back into the order flow of what's happening. So I'm going to make this 50% because I don't want it to be too bright. And then what I'm going to do is I'm going to drop down to the 4 hour and we'll start looking for PDA arrays resting on that time frame. So as you can see, we've traded right up to this buy side liquidity, but haven't actually tagged it yet. Tomorrow's Friday, so I'm not really expecting too much. Honestly, this week I've pretty much given up on even trying to think about what the market's going to do. It's been a very expressive week, so to speak, so I'm not going to speak too much. However, once this buy side liquidity does get tagged, I'm expecting some kind of pullback, obviously, a retracement, and then I'd like to see it push further and deeper into that breaker, which we marked out with this bright blue box. So where's price likely to draw back to? Well, we can look for the breaker, or we could look on the daily. We can look at the entire range and have a look at where the 50% level of the range that we're currently trading in is, and then based off that we can start to figure out where the price is likely to trade to. So I'm going to use this swing low to this swing high. Why? We've got a bullish order block here, and then we have another bullish order block which is stacked on this. So I think this is, I keep forgetting the name, I think it's a proportion block. I'm not 100% sure, but I am going to do that. We'll drop down to the 4 hour and we can see where price is likely to return to. Remember, price has a tendency to return to equilibrium, which would be here. There also happens to be a bullish order block here, and we've got a lot of upside delivery, so it wouldn't be surprising to me if we took out that buy side and started to step our way down towards this bullish order block. So I have got my eyes on this. I will mark that out in a bit. Again, I'm expecting to see some kind of resistance happen around here, but I am going to mark out this bullish order block. I'm not going to draw the whole order block. I'm going to draw the wick and the upper wick. Where's the open? Yeah. We'd have to drop down to a 1 hour to see. Yeah, that makes sense. Cool. So I'm going to make this orange. Again, I'm not expecting price just to come straight down. We know price doesn't do that. I'd like to see this buy side liquidity get taken, and then I'd like to see a nice low resistance liquidity run down into here, find some resistance around here, and then break lower, touch this order block, and then maybe work its way back up and touch the longer term breaker that we have marked out. It's very unlikely for price just to come down and then go straight into that breaker. Like, I can imagine we're going to be quite range bound for a while. I am going to take a look at our new week opening gaps as well, just to have a better look at where we are. But for now, I'm going to mark out this order block, the upper wick of it, and I should probably draw my daily dividers. So I'm going to add some daily dividers, and I'll be right back. So I've added my daily dividers, as you can see along the bottom, and I've looked at the complete range of this week. So this is, if you've been watching me for a while, you'll know that I preach how important daily ranges are in terms of looking at the midpoints. Same with weekly ranges, which is why I wanted to point out this is the midpoint of this current week's trading range. Obviously, if we break higher tomorrow, which I'd like to doubt, but again, this week there seems like there's no rules, so I'm not going to say anything. But this is around the midpoint, so next week or the week after, I wouldn't be surprised if price again returns to this level in reference, and then we see some kind of turnaround or some kind of reaction. You can see that this midpoint of the last IPDA data ranges, let me say that again, the 50% level of last IPDA data ranges trading range is this red line. So when we get to these levels here, there's also a fair value gap here. Again, this is somewhere I'd expect to find some kind of resistance or some kind of consolidation. So I am going to mark out a fair value gap. I am going to mark out this fair value gap, because when price does come into here, I wouldn't be surprised if we bounced away from it or price consolidated or had a hard time getting through it, because I'm expecting to find some kind of support here. So I'm going to mark out this fair value gap as well, although that is on the 4 hour. But hey ho, this is on the 1 hour, but again, it'll be interesting to see how price responds to this level. Again, this could all happen tomorrow for all I know, so we'll have that marked out. And it's likely that again that price will find support here and will then trade to some kind of swing high or engineer some swing high to take from this level, purely because again this is a significant level from last period's range. So, and you can see how aggressively we traded through it. So again, when price comes down here, I wouldn't be surprised if we turn away from that. For price to get down to this level here, it would need to trade through this aggressively. I'll say that again. For price to start getting down to these levels here, I want to see it trade through this 25% level aggressively. So I'd like to see some kind of break in market structure or a rush towards this level. But again, I'm not really expecting that this week. Although tomorrow is non-farm payroll, so again, stay out the markets for that. A lot can happen, but I'm not going to speak too much. So yeah, those are the two. I'm going to stretch it out right into next week, because I'd like to see how price responds to that really. And then what else did I want to look at? I wanted to put on our Sunday openings. So I'll be right back with the Sunday opening levels, and then we can the new week opening gaps, and we can have a look. So my charts look an absolute state right now, but if you've been following along, this shouldn't be too confusing. I'll explain it nice and clearly for us. So the black lines are delineating Sunday openings. So if you know about the new week opening gaps, then you understand how price refers to these levels. As you can see. You can see how this level is close to my breaker, which is at pretty much just below the breaker, which I was talking about on the higher time frame. This is the same buy side liquidity from the last chart. So I wouldn't be again. You can see how we traded aggressively through this Sunday opening, kissed it goodbye, left it. So it's likely that we're going to trade up to this one and find some resistance there. That will then push us back down, and you can see how this this was it an order block? Yeah, this was an order block, wasn't it? This order block is in the midpoint between these Sunday opening levels and this Sunday opening level. So again, the fact that these Sunday opening levels are around areas resting above the buy side liquidity where I'm expecting price to tag, and this order blocks below this level in between here, these are all confluences and adding reason and support as to why I want to see prices trade to this level. This buy side probably, I don't know when it's going to get tagged, but I know that as soon as this buy side liquidity gets tagged, I want to start looking for shorts, and I want to see us start to run into this level and into this level. But I'm going to come off this new week opening gaps because it is a bit messy, and also we're going to have some new ones next week obviously anyway, so Although I do need to add, have we added this week's? This week's was over here. But anyway, we'll go back to here. So yeah, I'm just going to give us a final rundown of what I'm expecting with the GBP. I want to see this buy side liquidity get tagged here. I want to trade into this area, and I want to start looking for shorts and see us aggressively break lower. Once we aggressively break lower, I want to start to see us trade into this fair value gap here on the hourly, which is also the 50% level of the last IPDA data range. Which is also the 50% level of the last IPDA data range's trading range. And I then would like to see us push lower and trade back to this bullish order block here. But again, this will likely take a long time. You can see here, looking back at the IPDA data ranges, once we trade into here, it's gonna probably consolidate for a little bit, and then we're gonna start to see ourselves work our way down. I do want to look at dollar. How long have we been going? 16 minutes. So I am going to take a quick look at dollar. We got the same IPDA data ranges applied. When it comes to dollar, I've got my eyes on its breaker. So this is the last swing low before the move upwards. This is a swing low before that, swing low, swing low, swing high. So my eyes are set on this breaker here. And there's also a fair value gap and a bullish order block and a swing low here. So I'm going to mark out all these as potential draws. Remember, the algorithm's referring to the past 20, 40 and or 60 days. So for us to have a turnaround here, we need to look at the past 20 days and mark out all the potential draws on liquidity, especially since we've had this clear break in market structure. So we're going to look, we want to look for all the potential draws. So I'm going to just mark them all out for us now. And I suggest you guys do the same in your charts. That's sell side liquidity resting there. We've got a fair value gap here. We'll make that orange. And then we know that the green is going to be the breaker, swing low, swing low, swing high. You can see that we've traded aggressively through this fair value gap. So now what does that mean? Price should not trade above this. It should find resistance here. So when price trades back into here, we should be looking for sells. Obviously, again, Friday tomorrow plus non-farm payroll. I don't want to say too much. However, I want to see volume stay below the 50% level of this fair value gap for confluence for us to trade lower. We'll probably meet some resistance as we trade into this. Because it's an order block, but there's lots of liquidity resting down here. So I anticipate next week for us to start to push low into the south side liquidity, whilst also seeing us hopefully trade higher into the buy side liquidity. So yeah, that's pretty much everything I wanted to state. I just wanted to make everything clear because, again, this week was completely unanticipated for me. That's why I'm literally like not even saying anything about tomorrow's trading, Friday's trading. But yeah, keep an eye out for Friday's video. I've got a backtesting video dropping. I know that you guys love that, so that's coming out. And yeah, thank you for watching. This has been GBP Baby, and I'll catch you in the next one. Peace.